Hello everybody, Sunday 25th of October 2020, it's Matt from Vector Trade. Just going to give you, again, what I like to say is a fairly straightforward but really essential tool that you need to have in your toolkit. This is all about identifying the trend. Just always remember the trend is your friend. You do not want to be going against a trend. The market's going up. What a lot of traders do is think, well, it must be about to turn to go down. Pure guesswork. They try shorting, market keeps going up, and then they lose money. Vice versa, the market's going down. They try picking the bottom. They're trying to be obviously, get in before there's what we call confirmation. So you really want to know, well, what is confirmation? What is a trend? So the best way of doing it is using moving averages. There's various moving averages. Generally on our more advanced charts, we'll have a 9, 21, 34, 50, 100, 200. There's different types, whether you have a simple, exponential, smooth. I find that simple is actually the better one for me personally. So what I'm going to do today, I've got a fairly clear chart. The only indicators I've got on there is moving average is the hourly one chart for DAX, but it works on all of them. Moving average 9 is green, moving average 21 is red, both simple. And the only other indicator we've got is at the bottom is the RSI. We're looking at 5 and 14. 5 is red and 14 is blue. So this is, not overcomplicate things. Keep things simple when you're trading. Each week we're going to be building up these toolkits for you. And then, if you're not clear on one toolkit, then you can use another tool if the market's not giving you what you can see. So here, purely we're looking at a cross. All we're going to do is look for it cross. When the 9 crosses 21, there's a change of trend. Moving average, whatever time frame we're looking at, is effectively that. If it's a moving average 9, you're looking, obviously if it's an hourly one candle, the last 9 hourly candles, so the last 9 hours. The 21 would represent the last 21-hour period. And that's all it is. Moving average 50 is actually the last 50, if you're on an hourly one chart, last 50 hours. If it's on a daily chart, moving average 50 is the last 50 days. So that's all a moving average is. So this technique, you don't even need to know what it is in theory. You're just going to trade the signal. So again, what happens? We start this could be anywhere. This is random. I've just picked it random. Go and do this yourself. Get comfortable with it. So at this point, what's happened here? Prices, lots of ignoring any other sort of techniques we use. There's a lot of uncertainty here. Price isn't, it's dropped below and it's struggling to continue the trend up. So you can just see on these levels, there's green candles coming off the 9 and coming off the 21. At this point, I'm just going to zoom in. This candle here, really, this red candle here, you would expect 2 green candles. You want it to really start rallying. That would be a warning sign there. You can see it's really unsure about where it's not quite a doji candle, but where the market's going. This red candle here, it cuts through, moving average 9, and cuts through 21, but then it gets buyers. Okay, and it just closed between the two. So at that point, the price is closing below the 9 is a bit of a warning sign. Okay, next one's green, unsure, stuck between almost a band. Then we've got a slight red there. That's another danger sign because there's no takeoff. There's no uplift. And the real danger is here. Marked on the chart is 13,207. We've got a big red candle that closes below both. That is big trouble. We've got the green cross through the red and the closing candle. You think, geez, this is going to drop. It comes down, comes back up, and now these moving averages where they were support is now resistance. Big red candle is struggling. The gap, there's a bit more of a variance now. The 9 is quite steep. And again, price comes up. So this candle would catch a lot of people out. This candle looks bullish. Forget the moving averages. This candle, you could say, is bullish. Comes up, down, bang. Lots of people would buy here. And this is what I say about confirmation. Don't enter till you got confirmation. People try and be clever and catch a bottom. They would have thought, that's probably a decent fib level to get in. Comes up, 2 green candles, get that green candle, and think, oh, this is good. I'm off. They add to their position, and then bang, price comes down. Look at this. All of these candles get rejected perfectly by the 9. Okay, and then eventually it's just like, right, flash crash, bang. So comes down all the way down to actually 12,500 say. So you've had a 7 pip move from that one technique there. So that's purely that cross. Price comes down, it's resistance. So actually, as far as trends go, again, you wouldn't. There's no reason to enter here. Just using this chart, okay. What we obviously have been using and practicing is our divergence. So you would expect we have double dip there. Price comes down there, so you can expect that, but that's not really necessarily a confirmation to swing trade this. Because you're way below the moving averages. So we've got that, and that would give you this pump here, just using the divergence, 12,500 to 12,831. So again, you've still got 830 pip profit. Amazing. But you can see this, that it's not really, the market isn't bullish at this point. Comes up, closes above here, but immediately comes back and is trying to get above. And these candles sticks, the wicks above here, it's really struggling to get above. So again, there's no crossover, so the market is not bullish. Where the crossover then came is here. It came back up. So if you entered here, let me just put this. You could enter at 12,644. You could obviously you could have entered here if we were using our divergence, but you could have entered there. Okay, and your stop loss obviously just probably below that last green candle wick, because that shows, and then it runs up. Okay, gets above. And then it's saying, this candle here is then a danger sign. It's a warning. Bit of a doji. Then you've got another red, and you think, right, so it'll come back, and we're looking for a test, but it doesn't test to then bounce, because what we've got here is immediately the cross comes back down. Okay, so again, what we'd do is put price here. Well, there's less price here, so that would be, if you got in there, would have got you 170 pips using the crossover. That could have been an addition if you'd bought down there and was still holding. Okay, then price comes back down, crosses here. Okay, again, we've got warning signs. What we're looking for is when the trend, when you've got these red candles closing below, price closes below the moving averages, it's a really bad sign. You need to be ready, you need to be flexible and nimble and ready to close your trade. If you were long, you think, no, we need to manage our risk really, really tightly. So price close, moving average comes below after price closes, so 12,717. That trade then comes all the way down, you 12,450. So what's that? 100, couple of 200 odd points. And again, at this point, it would have taken all these stop losses out if you move stop loss to break even, stop loss to entry. Comes down, you then get this huge green candle. Okay, comes right back. You think, okay, this is good. But again, still no proper crossover. You come down, price comes back and it's bouncing off the green, so showing that short term could be a trend reversal. Bank comes back up, but again, so you would have entered down here, okay, 12,548. That's where the low point, and then the weighted stop loss probably be around there. But you've got to know what you expect when it comes for this back test. Okay, if it's truly bullish, big green candle looks bullish. Bounce there, good. What you would expect is this. The fact that this immediately, you've got a red candle there, then another red is it's not very strong, is it? Then this next one comes back and price closes below, and you can see price never really gets going. It never really takes off. So we've got that price is basically hugging those moving averages. Look at the angle of them as well. So here you get a nice steep angle. So on the pullback, yeah, you would look to get in there and then go, but because it doesn't, and effectively you've got all this almost resistance around 12,696, 12,700, which is very interesting because you'll see it's the point of where it crossed over before, then acts as resistance. As soon as we're getting these red candles here, closing back below, you think, well, it's not ready to go up yet. There's no clear trend. Okay, and then again, it crosses, comes down here, crosses at, where are we, 12,649, and price comes there, 12,338. So again, another 311 pips. Okay, so what happens then? Price comes up, get a nice green candle. Again, it's not massively bullish. It's good because it shows a buyer pressure forcing price back up here. But there, then you've got the red candle. It's still struggling. Okay, so a lot of people would be tempted to get in here, and if they do, then brilliant. Could be a nice run, but sometimes you want to miss these moves because you want to get the confirmation. The confirmation, effectively a trend change again. Come in here, we've got that crossover. Crossover comes at 12.56. Price comes above. Now this is the key candle, okay? Because this candle is now back above the line and bullish. So when you've got this is just coming from below. But what you want is for the test, when it comes above and then back down, for that test to then be bullish. So here there's no real bullish bounce off the moving averages to drive it up. Here there is. This is a really good candle. Price comes above, back down, and bang, and off we go. So at this level, the crossover 12.546. Price then goes back up 12.951. So these aren't small, positions here. They're not small pips. They're really good entries. So what you want to do is, again, for the trend, so price comes here. Okay, this is a bit nervous, but you've got the wick below. This is the danger. It crosses back below both of them. Then price tries getting back up. Lots of wicks. There's no continuation. So again, you're not trying to buy here. Because again, look, price just comes down. If you entered here, there's no confirmation. What you want is the price to come back up, and then on the retest, you get a strong bullish to then go up. But I want you to start looking at this. I want you to using this. Use it. You can obviously tie in with some of your other tools just for additional help. But go back through your charts, whether it's DAX, whether it's Wall Street, S&P, any chart. The 9 and the 21 is really useful to give you that trend. So again, on the daily, you start on the daily and say, well, where's price? Is it above or below moving average 9? If it's above, and you can obviously see using channels and trend lines that price is moving up, then that's exactly what you want. It's a really powerful tool. Looking at the crossovers, it stops you from catching a falling knife. So when the market does sell, people panic, and they're not sure where to get in. The psychology is like, well, it must bounce soon. That's a common thought traders have. It must bounce soon. It's dropped 500 pips. Now, if you're on the wrong side of that, it can keep going maybe 2,000 pips, 3,000, depending on what market you're in. So what you need to do is you only enter. If you're buying, you only enter when the price is above. You look for the pullback, and then you look for a strong candle. So again, I'll just talk you through it. Price is coming down. You could risk buying here, but you don't want to do that because price could just continue dropping. I mean, people might have thought this was the bottom here, these green candles, but it just acted as resistance all the way. Price, the moving average was rejecting the price the whole way. So this would be, well, try and work out yourself as well as you're watching this now, where would be the entry. But again, for me, what I want to see is the crossovers here. Okay, 12.668. This is a really nice candle. Okay, but we've not really had that back test. Here again, you could have had sellers maybe trying to short this candle or trying to short the pullback. But again, what you'll see is on the retest, price come above, retest this green candle here. Okay, is strong. It tests a moving average 21 for the second candle in a row. Price is driven above closes. This is a strong candle. So for me, to play it safe, you've got the crossover, then you want the retest. So the entry, could be that one, 12.733, but probably I'd look for the next point. So 12.753. And again, price goes up 12.967, so another 200 pip profit. Again, price comes back here. So if you were looking to short this, you could obviously have a look at these candles potentially, but what you want to do is again wait for the trend change, which is here. Okay, and to stop you chasing that move, because again, at this point, all these red candles, look, they do look bearish. You can imagine people thinking the market's going to drop. So people might start entering the sells here. Okay, but again, do not do that. Wait for the price to come up, and then if it rejects price here, and then you got a red candle which then closes back below after the retest, then you're going to get the drop. But this will just save you from chasing moves and losing money. So again, you would wait in here. So use this again. So price comes up, you've got the crossover here. Okay, there's the crossover. Then price comes back up, and you wouldn't get in here. Okay, you still wouldn't be waiting to get in there. You wait for that next candle. This is retest. So this is a nice strong candle, comes back and above. Price never on this point, never moving average 9 doesn't drop below 21. Okay, So it doesn't. So you're looking for the pullback. You get the pullback. You've got that big green candle, closing above. So in this particular instance, again, you might have entered, you might have missed the best entry there, but 12,896, and again, market comes all the way up 13,180. So again, hundreds of pips of profit. Again, here just picking at random, you'll see price at this point, moving average 9, crosses through 21. Okay, so you say, right, well, I'm not gonna, I'm not chasing the move. You want this back test. So price will always come back to the back test the moving average. So again, you probably would have entered. So crossover was 13,128. You could have entered, back at these levels, because again, price is below 9. 9 is crossed through 21. 13,124. Say you didn't. Say you waited for this red candle just to play it safe, and it was 13,112. Again, price comes down and it cannot get back above the moving averages. It's struggling here, but you can see all the wicks as sellers pushing price back down. And then we'll see these prices congested here. It comes back out again. You've got a doji candle. It's not sure what it's going to do. Red candle, slam down, slam, struggling to get up. So again, what would stop you buying here? Again, chasing this move. So you see these candles and you think it's making, a lower high, sorry, a higher low here. So you think, right, I'm going to get in there. Good fib level or 2 green candles. You can see people saying market's going to go up here. Okay, so you can see genuinely, you might think that's the case. Market's going to go. I've had 2 green candles, but again, there is no crossover of 9 and 21. So trend is still down. So in a downtrend, you want to sell above. Might not have guessed this. Just in case the market did shoot up, you're not going to play with that. You're not going to gamble. Wait for the big red candle, okay, and then you want the back test. So in reality, you wouldn't, you might have missed the first 50 pip of the move. It's no big deal. It's going to save you your face getting torn off if price shoots up. Price comes down. Reality, you might have got in to say this level. Let me just put price here. You might have gotten at this level, okay? So the top level was 13,054, so you've missed, 49 pips. But you're waiting for confirmation. Stop loss just above. Price comes all the way down to 12,598. So 400 odd pip move, 407 pip move. Brilliant. And that's, again, we're not even really looking at the RSI for reversals, anything. There's no other complicated indicators on this chart. I'm just using 921 crossover, and to stop me from chasing the move, I wait for the back test. So again, if I miss 50 pips, I'm not concerned because I want confirmation. And this really, just keep it simple. Keep trading simple. Don't listen to anyone else. Use your own tools. These tools work. So just be very, very disciplined. Risk management. This will effectively stop you buying here. You wouldn't buy there. You might do without this instrument, without this tool. You might say, well, it's come down loads. And you could. I probably wouldn't. But sometimes, we're not perfect. You could fall into the trap, but somebody could say that's an A, a 1, 2, 3, B, and a C wave down there. They see the green candle, 3 waves back. They're looking down here at RSI, say, oh, well, RSI is low. Technically there is a bit of divergence. It's not really steep angle that I would like, but you could imagine when they see this green candle and then a second green candle, think, right, it's time to go. So people buy here and then market drops. And that is because we're looking at the trend. The trend is down. When price is below moving average 9, trend is down. When price is above, trend is up. So when it's a downtrend, we want to sell high. We want to sell on the retest. When the trend is up, we want to buy low. Okay. So when the trend is up, you're not looking for sales. You're not interested. You want to wait for confirmation. When market's down, you're not going to buy until you've got confirmation. So this is really about self-discipline. It's just using the tools. The tools will allow you to make money. If you fail to use them, there's really no excuse. This is how you can determine trend. The trend is your friend. Remember that. Don't go against a trend. You will get burnt more times than not. Don't try and pick the bottom. Don't try and pick the top of a market because it can just run away. Just look at these. Go back through any instrument you wish to look at, whether it's cryptocurrency, whether it's Forex, whether it's markets. Just use it. It works. 921 crossover. use it for analyzing where the trend is, and it will stop you getting into bad positions. It will stop you buying too early. It will stop you selling too early. And again, for profit taking, people quite often say, "Where do I take the profit?" Um, so if you want to play it safe, it depends how you do it, what your strategy is, whether you want to make 50 pips a day, 500 pips a day, or whether you want to make, £500 a day. It doesn't matter. It all depends on you, because if your total profit, you want to make 100 pips, you might have an automatic limit order to sell here. If it's 200 pips, you could have had something down here. The other option you've got, and the danger with this is you lose pips, but it does stop you cashing out too early, is you just wait for the trend to change. Okay, so you wait for the crossover. So you get in here, okay, and you just let it ride, move stop loss down, and then you don't cash out until the crossover. The only reason I don't like that is because potentially you've missed out on a lot of trade. But what it does allow you is just to let the profit run. So sometimes a lot of traders, most traders actually, have problems letting profit run, and they say, "Oh, how do I take profit? When do I take profit?" And you just have to say, well, the best way of doing it, so that the trend has definitely changed now coming against you, is just when you get the crossover. So you'd have entered up here, down, and you then close your position when you've got that, so the trend is now changing. It's just another way of doing it. But again, you need to decide what you want out of trading. Not about what everyone else wants. Everyone's got different risk management, risk appetite, the bank account size. They're trading different pip amounts. Some want to swing, some want to scalp. So again, these tools, you can use this on minute 1 chart, you use this on minute 5 chart, use this on weekly chart, and yeah, go play with it. Go and have some fun, and definitely use it this week. For obviously everybody on the course and with Invexa, it would be really good actually for you to send a screenshot into the group, the WhatsApp group, or send it to me privately, and we can all have a look at it and review whether it worked, how much money you made from it. So again, that is the lesson for today. Please watch this video again. We are concentrating purely moving average simple 9, moving average simple 21, looking at identifying the trend. Where is the trend? What's market doing? Is it uptrend? Is it downtrend? Sometimes range bound market where it's just ping between certain zones. But use that, and yeah, hope it helps. Please subscribe to our YouTube channel. Share the videos if you know somebody might benefit from it. Obviously, like and comment, and yeah, I'll catch up with you all soon.